Bond markets are breaking and traders are really scared. Could the big pause finally be coming? The Republicans are set to take over the House. What does it really mean? The SEC has another huge setback in their case against Ripple. Abra's new trading system is almost here. Abra USD is coming. What does it mean for you? This one is super cool. All right, lots to talk about today, folks. It's time for Money Talks. All right, good morning, wakey, wakey. It's time for Money Talks. Lots to talk about today. The world is still going crazy. I'm going to start off talking about Ukraine. I know normally don't spend a lot of time on geopolitics here on Money Talks, but Ukraine is more than geopolitics to us here at Abra. We have a tremendous amount of staff in the Ukraine. We love them dearly. They contribute to the product that all of you use and love every day. Now, I'm a pacifist at heart. I don't believe that war solves very much, except arbitrary lines on a map. Except in this case, we have to be very clear. On the one hand, I'm extremely clear for myself that Vladimir Putin is the aggressor, and if it's completely on him that so many thousands and tens of thousands and probably ultimately hundreds of thousands of people have been died and millions displaced because of this war and his acts of aggression. But the real question is the U.S. unnecessarily prolonging this war, or should we have basically done more upfront to make sure that this never had happened in the first place? I don't know. I'm not a geopolitical expert. I'm not a foreign affairs expert. I've been to probably 65, 70 countries in my life. I've seen a lot of shit. I spent time in Haiti after the earthquake, which had a tremendous effect on how I look at the world and the U.S.'s place in the world. But on the other hand, I don't know that sending endless amounts of weapons to the Ukraine was in our best interests. And honestly, it's difficult for me to think this through when we have so many friends, employees, family in the Ukraine who are suffering as a result of this aggression. I've been following David Sachs for a few weeks now. David is somebody I've known of for a long time. I used his product Yammer years ago, and I think he's a fantastic CEO, fantastic investor, great thought thinker. He's a hardcore libertarian, just like me at heart, and he has major issues with the U.S.'s role in the Ukraine right now, as do I. But more importantly, he has major issues with our inability to come to some type of peace deal with Russia, which really doesn't make sense. I mean, you can wind back the clock, look at what got us into this in the first place, and it looks like we're moving in the other direction. So it's hard to say. A couple of comments he wrote this yesterday that I've been looking at, or actually early this morning, commenting on foreign policy being really about dedicating finite resources to accomplishing defined geopolitical goals. But since the end of the Cold War, America doesn't seem to ask or answer basic questions about what our war aims are. We get ourselves into these wars with no way out. It's short-term thinking, not long-term thinking. Right. It's long-term thinking is why we lost, or the lack of long-term thinking is why we lost in Vietnam, why Afghanistan has basically reverted to the mess that it's in now, because these wars are effectively games of attrition. And if Ukraine is the same, meaning there is only so much weapons we're going to basically ship over there, and at the end, the outcome will have been the same anyway, because it is a war of attrition. And if that's true, and Russia's really playing a long game, and we're not, it's not going to end well for anyone. And he also commented that the United States shouldn't be in a nuclear crisis that most Americans don't really understand, right? And that's really the whole point here. And again, I'm torn here because my heart goes out to all the people that I care about, who I know who are in the Ukraine and who are suffering. But we have to ask ourselves if we're doing right by them with this approach? Look, the bottom line is I don't know, but whatever we're doing doesn't seem to be working because the war continues. Yeah, we can make the case that Russia's losing, but the war still continues. So this leads to part two of our macro commentary this morning, which is bond markets are breaking, right? As I said in my opening, traders are scared, right? People are like, hey, what is going to give here, right? Yields are going through the roof. Now, here's a concern I have, right? So think about years ago, long-term capital management, right? That basically almost broke traditional markets. Think about crypto winter, what happened when Three Arrows went bust and the contagion spread to everybody who had levered exposure to them. Who has levered exposure to the bond market, right? So let's make sure we understand how bonds work. As interest rates go up, the value of bonds go down, meaning the price of the bond goes down. If you are levered long bonds, that means you're making a bet that interest rates will either stay the same or go down. Even in small amounts, if you're highly levered, can lead to large profits. But if markets go the other way and you're highly levered bonds, you have a problem, right? And some people are adding to these positions thinking that markets are going to turn around. Right. So my concern is we don't know who in the traditional markets is levered long U.S. Treasuries as rates are continuing to go up. And this scares me. OK, now that having been said, it does lead to the point that something eventually has got to give. Fantastic tweet from this Concoda is the name of the Twitter accounts. He wrote that bond markets are growing increasingly unstable, and many have warned of a sovereign debt crisis unfolding. Monetary leaders possess numerous tools to prevent a disaster, but the great sovereign debt intervention is probably upon us. And I agree. At some point, something is going to break. The markets are breaking now, and something's got to give. Tasked with preventing sky-high inflation caused by supply issues. Now, this is an important point. It was not money printing that caused the inflation that we had coming out of COVID. It was supply chain issues, which were beyond the control of the Federal Reserve. This is something that people don't understand. The Federal Reserve has been forced into raising rates sharply to lower prices towards their 2% target. That's true. They feel that they've been forced into doing that. People talk about money printing. Even I use the phrase money printing. Quantitative easing, as it's been defined by the Federal Reserve, is not really traditional money printing. What they do is they basically buy bonds on the open market, and they effectively put an artificially high balance as a result of buying those bonds in the account of their member banks or others that they're buying these bonds from. They didn't actually print money. They effectively created an IOU, which means the money doesn't land in Bill's bank account. It doesn't land in your bank account. So yes, it is a form of monetary debasement and inflation when you really break it down in terms of the balance sheet, but it's not really, just printing money the way we would, metaphorically explain it. Okay. This was really about supply chains. So this will undoubtedly cause substantial pain worldwide, right? These rate differentials are going to spur a strong US dollar, which we're already seeing. The dollar is going through the roof, which affects at least, if not more than 50% of transactions, which are invoiced in dollars globally. The Fed's gambit is to fight inflation without blowing up other nations through a rising US dollar. And they are losing on that gambit, right? The world is basically now getting to a point where we're begging the Fed to stop what they're doing, and they don't care. The Fed is not concerned. And by the way, this was the great bargain of Bretton Woods, which was that the US dollar, the US greenback, would become the global reserve currency, and the US would promise to create a stable currency as a result. They've lost that narrative. They lost that years ago. So now the question is, okay, you basically gave up that narrative years ago, but it's a double whammy now, because now you're basically trying to get back to that narrative, but you've created a situation which for international economies is now untenable. Anyway, so, many commentators see these rate hikes as the worst possible solution to what has been a crisis of supply, as I said. But political goals have ensured that dollar fatalism will be enforced to battle these rising prices. Anyway, so this base wrecking ball of higher rates will keep crushing global prosperity. You can go see Concoda's tweet storm. CONCODA is his his Twitter handle, and you can do search on Twitter and you'll find it. Anyway, super interesting. I hope that things change. And I think that we shouldn't have been in this mess in the first place, and we shouldn't have basically had loose monetary policy. And we're now basically correcting one mistake with another mistake. And I don't know where this is going to end, but at some point, the Fed is going to have no choice, as I said, but to pause. If they don't, the cost of servicing our debt will become untenable. We will have a global depression. And so as a result, like I said, we know at some point where this is going to head or end, We just don't know when, how long it's going to take, what the steps are in between. I would posit that it's most likely going to be a big pause. Now, speaking of big pauses, did you know that there's someone who is referred to in the markets as the Fed Whisperer? It's an interesting title. He's actually a journalist at the Wall Street Journal, and his name is Nick Timiraos. I will show you a tweet storm that he released a few hours ago. And Nick has an interesting ability to move the entire markets, which I've never actually seen a journalist do that before. But Nick can do it. And he wrote this morning that the Fed is barreling towards a fourth straight 75 basis point rate rise at the November FOMC meeting. That meeting can serve as a critical staging ground for future plans, including whether and how to step down to 50 basis points in December. Step down to 50 basis points in December basically means that the Fed would slow down the pace of rate hikes. That article, that tweet moved markets this morning. It caused a spike in the S&P. It caused a spike in Bitcoin. And it caused a spike down in short-term rates. So I'll look in a moment at where we are in terms of crypto, but Nick definitely moved the markets this morning. Some officials are more eager to calibrate their rate setting to reduce the risk of over-tightening, but they won't want to dramatically loosen financial conditions if and when they hike by 50 basis points. This meeting could allow officials to get aligned on next steps. So lots of confusing quotes that Nick tries to kind of assemble together to make it clear that we're no longer in this kind of single thread of rates have to go higher. Now it's kind of a confusing jumbo of, hey, not really sure what we want to do next. And that actually sends a signal to economists and traders that, hey, now there's a pretty significant chance that we're going to get a slowdown here. And that's what you get when you're at the bottom of or at the end of these hikes, is you get some confusion. And the confusion in of itself sends a message, right? The equity market has been so eager to see pivots by the Fed. Those pivots include a slowdown in the hiking pace, a pause, and eventually cuts. The equity markets keep jumping ahead to the last pivot, and we're a long way from the Fed cutting rates. So all kind of conflicting statements at the same time. The half-point hike at this meeting would result in a dramatic loosening of financial conditions, no matter what language they paired it with. But by December, you can keep financial conditions very restrictive, even with 50 basis points. So again, lots of conflicting statements, but we didn't have a lot of conflicting statements in June and July and August. Everybody was like, hey, these rates are going higher and deal with it, right? And so really interesting comments. Let me stop this. If I can figure out how to do that. There we go. Again, so you can follow Nick on Twitter and get more details there. I follow some really interesting. I've been learning a lot from a few people. Peter Zeihan is another one. Luke Groman is another. Of course, Lynn Alder, who most of you in the crypto world know now, she's another one. So at the same time, we've been talking about the macro and where this is going and the big pause. Midterm elections are coming. So I'm looking at the clock, today's October 21st, and we are about 2 weeks away from elections in the United States. It looks like it'll be a rout or a near rout in the House for Democrats, as the Republicans are set to take over the House, which is very interesting. So I had a chart that I wanted to show you. I don't think I misplaced it, but basically it showed that by most measures, most polls, most analysts, that yes. Oh, here it is. I've got it. It was Jim Bianco posted it this morning from the person at the New York Times. His name escapes me. It'll come to me in a minute. But here you can see 538 is the website I was referring to. It's managed by a New York Times writer. Let me see if I have his name here. I think I do. Nate Silver. Nate Silver has become quite infamous for some of his political predictions, and you can see that he's not as clear as predict.org or predicted.org, but they're both converging on this idea that the Republicans are clearly in the lead in taking over the House in the midterm elections. So what does it mean? Like, what does it really mean for the Republicans to take over the House? Well, generally, when you have a divided Congress, so there's kind of three perspectives on getting stuff done, right? And generally, markets consider Congress getting stuff done to be a bad thing, okay? And they usually, because that means that they're doing harm, right? Whether because it's raising taxes, especially if Democrats are in power, to more regulation, more oversight, more cost of doing business, et cetera, et cetera. However, when you have a divided president versus Congress, as we did under President Obama, when the Republicans were in control of the House and the Senate, almost nothing got done, right? And we had basically political stalemate, and we had a pretty good economy. Right, and then when President Biden took over, they own Congress as well. Obviously, a lot of people feel that they were not helping and exacerbating the inflation going on with a lot of their policies. And now the belief is of course, that if we have a divided Congress, we'll have this do no harm doctrine again, where nothing will get done, but at least they'll be doing no harm to the American citizen. Okay. So again, I obviously don't have a crystal ball, and I don't know what's going to happen, but I do believe that the Republicans will win the House. I believe this is good for crypto. Anything that delays a lot of the nonsensical legislation that I'm seeing is ultimately good. I think crypto has survived for 13 years, mostly without nonsensical regulation. You can look at New York and make a case either way, I suppose. And I hope that this trend continues, and people will realize that the existing legislation is already, or the existing rules and regulations are already to a certain degree overbearing on the industry. Interesting thread that I'll get to by Eric Voorhees, who was commenting on Sam Bankman-Fried's proposal for regulating commodities futures markets in the U.S. for crypto. And I think Eric gets it right as usual. And then we'll also talk about, speaking of overreach, the SEC's case against Ripple in a few moments. Okay, so like I said, I think that the Republicans taking the House is probably a good thing. It's a wake-up call for the president. Stop this, that the overreach is done. Okay. So again, we shall see. All right. So let's talk about crypto prices for a minute. Then I want to talk about SEC, and then we'll get into Eric's comments. All right. So what's happening in crypto markets? As I said, now the markets are actually higher. When I don't sleep very much on Fridays, because I spend some time preparing for this, getting my weekly news updates, and forming my own kind of editorials for Money Talks. And so when I was starting to work on my commentary, Ethereum and Bitcoin were actually fairly down. Now, it's all relative, right? The volatility in crypto has really dried up over the last month or so. And it's pretty clear that most other assets are more volatile than Bitcoin and Ethereum right now. So this chart goes back to May, but if you just look at the price of Bitcoin from early September to mid-October, we're at the same price, right? From when we did Money Talks a few weeks ago. And yeah, now look at the candle here, this small, I don't know if you can see it. Let me try to zoom in. I'll go to an hourly and I'll zoom in here. But if you look at today's candle, right, what you'll see, I'm going to go to a 4-hour, right? You'll see that we were on basically a downtrend from earlier in the week, right here. Look at this big red candle yesterday, which was a 1% on a 4-hour. Then we spiked down a few hours ago and then spiked back up. So this was a, let's see, 1870 to 19.1. That's 400 points in one 4-hour candle, right? The bottom, from bottom to the top, and now we're in the middle. Now we're at the top of this candle, which is really good news. The next candle, so far, we're only 20 minutes into it, so there's no big movement there. But this candle basically was a short-term bottom, which was caused by the movement in the markets, which to a large degree were caused by the comments of that journalist I mentioned earlier, the Fed whisperer. So again, the narrative is macro has become crypto, crypto has become macro. And we can see here that the markets basically are in an apathetic mode where there is zero volatility in crypto while everyone is seemingly waiting for something to happen. That having been said, we've come off the kind of low volatility lows and are now back in that 19 to 20K range. And it looks like Ethereum is back to get into that 1300 floor that it had broken a few hours ago. So pretty interesting movements there. I don't have a lot more to add because there's so little volatility in the markets. You can see, look at some of these 4-hour candles where on the bottom you can see the relative volume, and the relative volume has gone to nothing, right? So there's a very little trading going on in some markets. Let me move to the Binance so you get a better sense of the trading volumes. You can see some spikes like there was in the last candle, which was a huge candle spike. Again, that was driven by the Wall Street Journal commentary. But before that, you can see there was significantly less trading volume. All right, stop that. So I do suspect that the proverbial rubber band is winding up as volatility shrinks. The rubber band winds up, it gets tighter, and eventually it has to go. And I think here in crypto, if we really return to a gold 2.0 narrative and the rubber band gets let go because there's this perspective that there's going to be financial loosening by the Fed, I suspect we might have a short-term move down on a sell the news and then a big spike up, right? I wouldn't be surprised if we see Bitcoin spike to 30K in the next, 3 to 4 months. All right. So anyway, we'll get to that commentary on what does this mean for what you might want to do with your money in a few minutes. But that's one, I think, very viable outcome of where this could all be headed. All right. So I mentioned SEC versus Ripple. Very interesting. I know that Ripple had I'm here in California, but I know that Ripple had a big party in Miami yesterday. Very interesting timing. It turns out that it was their 10-year anniversary. Yes, Ripple's been around for 10 years. And Ripple at the same time, I say ironic because they also won a court case against the SEC, kind of an interim step in their fight with the SEC, who has sued Ripple, claiming years of unregistered security offerings. And they obtained long sought the documents of former internal officials who declared Ethereum is not a security. So they received a treasure trove of emails and documents from within the SEC, which have been turned over to them. And the founders who created the XRP cryptocurrency, who now find themselves as defendants in this case, which is obviously super high profile legal battle with the agency over its assertion that XRP was illegally sold as an unregistered security. Their internal general counsel, Stuart Alderati, I believe is how you say his name, he broke the news on Twitter on Thursday, declaring a huge victory in an 18-month battle within this larger war, of course, with the SEC over the collection of discovery material dubbed the Hinman documents. These documents revolve around an internal or an SEC director, Bill Hinman or William Hinman, and a highly publicized speech that he gave back in 2018, where he declared that Ethereum, like Bitcoin, was sufficiently decentralized and thus not subject to federal securities regulation. And Hinman's remarks that day represented probably the biggest loosening of the debates over whether Bitcoin and Ethereum were securities. And the theory is that these play a key role in the SEC's lawsuit against Ripple, asserting that Ripple sold XRP as an unregistered security, that now has a market cap of over 20 billion, which makes it, I think, the fifth or sixth largest cryptocurrency. So, of course, Brad Garlinghouse, the CEO of Ripple, chimed in during the company celebration. He said the SEC's pursuit of a policy objective isn't about a faithful allegiance to the law. It's about power. There is no regard for those companies and people that this approach has harmed. We should all be outraged, and I'm not surprised. The SEC wants you to think that it cares. This is Brad speaking now. The SEC wants you to think that it cares about disclosure, transparency, and clarity. Don't believe them. When the truth comes out, the shamefulness of their behavior will shock you. Again, you have to pay attention to who the messenger is here. I've known Brad for years. He's generally a very reasonable guy. My guess is that when these individual sales happened, you could make the case that they were securities offerings. As I've said all along, my problem with that approach is that the SEC let it go on for 7 years before they tried to go after them, or before they went after them. That doesn't make sense to me, and it never has, and it never will, regardless of the outcome of the case. My understanding of this, and I'm not a lawyer, is that we may have to wait until next summer for some form of resolution of this case. I don't know what's going to happen, but I know that the judge has been very, very hard on Ripple in this case. I'm sorry, excuse me, let me step back. It's the opposite. The judge has been very hard on the SEC in this case and has on occasion literally berated them for their behavior. That in of itself doesn't imply Ripple's innocence, but because they went after those individuals, Brad and Chris Larson, they have rights, and they have right to due process. And if the SEC is interfering with that due process, that could end up implying innocence to the court because of the value of evidence and other commentary. At least that's my understanding. And so the SEC is not doing itself a good service when it puts itself in those positions to be berated. Okay, so that's my comment on crypto. One of the comments I want to make, and I think somebody brought this up in the chat. I saw it earlier. I was glancing. Oh, yeah, Catherine. Good morning, Catherine. So I did read Kathy Wood's open letter to the Fed, where she tried to make the case that the increasing interest rates were harming the economy, and that supply chain issues were really to blame for the CPI going up, or inflation, and that productivity boosts from technology over time would deal with inflation. Look, Kathy's right. You know, if you're going to play a long-term game, ultimately exponential technologies have been the saving grace of the American economy for 30 years, since the early 90s in particular, with the onslaught of PCs and then the internet and then smartphones and now other technologies like AI and robotics. And she'll be right for the next 30 years, I suspect, although she'll probably be retired on a beach by then. And I don't think it's going to change the Fed's perspective at all. They are not focused on productivity gains via technology. They are not focused on long-term thinking. They are focused on the very short-term issue of wanting to see that number come down, even though it wasn't really them that caused the number to go up in the first place, right? So Anyway, so I think that it's a foregone conclusion that we're going to get at least 2 to 3 more rate hikes. And I think that the last two of those 3 hikes will be smaller numbers. It will send a message to the markets that they're slowing down, that financial conditions will loosen. And I do really think that we're going to have a game on event for risk on assets, particularly crypto. And it is as a result, let me cut to the chase. I don't time the market. Um, but I can tell you that I am long and increasing my long positions in crypto to the extent that I can, because I'm already very long. Because I really believe that we're going to have no choice but to get back to basically a stabilizing of the money supply, and then eventually an increasing in the money supply as well. But that's me. That's what I do. We provide information. You make your own decisions, and either way, life will go on. All right, so I promised a commentary on this kind of response that my friend Eric Voorhees wrote. Eric is one of the best thinkers in the crypto space on the future of money as it relates to the states, as it relates to what he perceives as state overreach and the checks and balances that we need in the separation of money and state. He wrote a very, very long article. I'm not going to read it to you. You should go to his blog. Just go to Eric Voorhees on Twitter, and there's a link, and I'll retweet it when the show is done. So if you follow me, you'll see it anyway. But he wrote yesterday, SBF, Sam Bankman-Fried, posted his digital asset industry standards, and he's trying to effectively create a framework for the CFTC and others to regulate crypto. The problem is that it's very self-serving, because he's one of the few that has this kind of regulatory model in place and has the cash to pursue it. And it effectively creates a moat around his business. And I've seen this before. I spent a lot of time in the money transfer space working, competing against Western Union, and they were constantly calling for more regulation, knowing that it effectively would create a competitive moat around their business. So I don't like this perspective. I think that it's very self-serving, and I think Eric is really right to call him out on it. And I hope that the debate is healthy. I hope it continues to be respectful, as it looks like it is. I like both guys very much. I've known Eric for years. I've talked to Sam a few times. I don't know him as well, but he does seem like a reasonable guy. He's smart to be spending a lot of time in DC focused on regulation. And he's smart for it to be self-serving and to create a moat around his business, right? At the end of the day, he is a CEO. He answers to the shareholders of the company, including himself. And, just like it was smart for Western Union to try to do that for their business. But it's the job of Congress to see through that and understand that we need a separation of money and state. That's what the Fed was originally supposed to represent. They weren't supposed to represent 40 years of falling interest rates because it was better for business. They were supposed to err on the side of the great bargain that was made back when we had Bretton Woods, and that bargain has long since been thrown out the window. So we have to operate as if that bargain is gone as far as the Fed is concerned, but we don't have to as far as new future legislation is concerned. So anyway, go read Sam's and Eric's debate, Eric's response to Sam. It's a really interesting read, and I'll let you get to that for your weekend reading enjoyment. All right, so on to Abra. I'm going to take the last few minutes here to give you an update on what's going on with Abra, and then we'll have a chance, hopefully, to answer a few of your questions. I do see a bunch of Abra-specific questions here. Thank you for the kind words on the commentary this morning. I'm not a geopolitical analyst, but I do read a lot. I really enjoy debating international politics, given that I've traveled the world so much. Those of you that may not know, I lived in Europe for about almost 6 years. So I really do care a lot about what's going on in the world. And we have customers in probably, 75 countries, maybe even 100 countries at Abra. And it comes and goes, the number, but it's a high number. All right. So what's going on at Abra? So as you know, we are in the final phase of launching our new trading system. It will start with market orders. It will migrate off of the existing platform. A few of you have already been migrated. You may not even know it to test, and it's going very well. The migration will be done for everyone by the end of November. And like I said, the process is going well. I will mention CPERCs. So many of you are holding CPERCs off of Abra. There's going to be a pause in CPERCs deposits starting in 5 days. So if you need a place to store CPERCs, you need to move it into Abra now. You won't be able to withdraw it for about a month, but that's okay. At least you'll have a place to store it. And then we'll get back to CPERCs trading probably a few weeks after that. We're working on the plans now, one step at a time. So that addresses that issue right there. I know a few of you were using Bittrex to store CPERCs, and you should move that CPERCs to Abra now. Don't wait, because starting October 26th, at least for a few weeks, you won't be able to move it off of Bittrex onto Abra for a while. Okay. So the vast majority of you are already staking CPERCs in Abra Boost, so there's no concerns. But at least for now, you can move it to Abra, and you know that it's safe. And we, as you know, have big plans for CPERCs going forward, and including, of course, our Amex Rewards card, which is moving along really nicely. So yeah, so Abra Trade coming up on tap, starting with market orders, and then a few weeks later, we'll be adding limit orders, which I'm also really excited about. So now I want to talk about Abra USD. What is Abra USD? So some of you have probably seen the commentary online on this. Forbes leaked it, and which is fine. They got it mostly right. It's Abra USD is not a new stablecoin. It is simply a name of your USD stable coins held on Abra. It's the consolidated balance of your USDC, your USDP, your True USD deposits. So having these stablecoin balances consolidated under Abra USD makes trading, deposits, withdrawals, earning interest, borrowing, all much easier to use and manage. And it has some huge advantages to you as well, right? That it means you're going to get the lowest spread, because if you're holding one of those three and there's a lower spread with a different token, let's say you're holding True USD, but the spread is lower with USDC on a trade, we'll actually manage that trade with the lower spread for you, and it'll be completely transparent to you, which means effectively, if you're using your stablecoin to buy Bitcoin, you're actually going to get more Bitcoin. All right. And let's see. So in the Abra Trade wallet, all three of those, USDC, TUSD, and USDP, will simply become Abra USD in your trade account, right? So if you have $100 in USDC, 50 in True USD, 30 in USDP, you add them all up, you have 180 in USD. And you can do one trade of $180 right into Bitcoin, and you're going to get the lowest price possible across all three assets. So hopefully that makes sense, right? Now, what also is really cool here, right, is that you can withdraw in any of those currencies with no spread. So let's say you wire money in and you get True USD, or you have USDC on another platform, and for whatever reason you need TUSD. When you withdraw, you can choose whichever of the three stable coins you want, and you'll get that stable coin directly at withdraw time with no spread and no fee. Okay, so to be clear, again, there is no new stable coin being created here. We're simply giving you a single balance, and you can trade across it. You can convert during withdrawal time, and again, there's no new stablecoin being created, and you can see what you deposited anytime. You just go into your transaction history, and it shows you how much USDC you deposited, how much TUSD you deposited, and et cetera, et cetera. You can also continue to transfer your Abra USD into Boost to generate yield, and it'll show up as one balance, and you'll basically get the same interest rate. So there's no impact to that. Your loans will not be impacted if you're using Abra Borrow. I'm showing here a article from our support FAQs. You can go to support FAQ, search for Abra USD, support.abra.com. I'll put the link in the live chat. Team, please put the link in the live chat, and you can just go read it up. There they go. Thank you, team. And yeah, so super easy. I'm really excited about this migration. It really is going to lower spreads and be fantastic for our users. So let's see, there was a few questions about some of this. Again, some of you were commenting, oh, Abra is launching a new stablecoin. No, we're not. Abra USD, again, it's just the balance of all the other stable coins you're holding. Tether is treated separately. That will remain a different balance, okay? So if you deposit Tether into Abra, you'll still see Tether as its own row in Abra Trade. So just to be clear, and it's also got its own interest rate in Abra Boost, and it's actually much higher. I think we're still paying about 10% on Boost for Tether. All right. Yeah, some people commenting on the magic of Abra, and so we should add Kadabra to the name. That is not in the cards. Thank you for asking. Yeah, we are going to have Julian on in a few weeks to talk about CPerks, probably coinciding with our NFT launch, which is coming up. Spending a lot of time on NFTs. We're going to have probably like a 4-week window of NFT focused episodes from mid-November to mid-December. So leading up to Abra NFT, we're going to start having a few episodes on NFTs, hopefully have some guests from the NFT space to talk to you about that. I've been working on my NFT collection, and I'm pretty excited to start to share some of it with you as I can move it over to the new Live Abra app. All right, sorry, I'm looking at my notes here. And yeah, so Julian will probably join for one of those. I think he's going to be with us in Miami during Art Basel for when we launch, and so we'll certainly have him on Money Talks Live. So some of you are asking about some delisted assets. I don't have the list in front of me, but as part of the migration to our new market order system, we are going to delist some illiquid assets, and that is simply a function of trading volumes and custody and our ability to provide a high quality service. And we'll look to add some of those and more. Expect in the coming weeks to see things like Solana and other high volume assets to be added into the Abra system at some point in the coming weeks as part of this migration. We should be in a good position to add those assets. No promises on timing or when, but yeah, we will get to that. So let's see. So I have a bunch more questions here. Let me focus on Abra first, then I'll get to generic market questions. Can regular retail investor deposit their CPerks from external wallets into their Abra Boost account and earn more CPerks as interest? Yes, Equilibrium, yes, you can. If you're outside the US, 100% of you can deposit CPerks into Abra and then move it into Boost to earn incremental yield. And then if you're in the US, you can all deposit CPerks into Abra Trade. And then if you're accredited, you can also move it into Boost to earn yield. And that leads to another question that I got, which is, what is the future for, I saw it, Dave, when you first posted it, but what is the future for non-accredited investors who have been with Abra for a couple of years? So our intent, so the reason that we created Abra Boost is this migration away from Prime Trust as the account issuer for what was Abra Earn. And so we had to create a new service. Abra Boost and Abra Earn are actually different services because now Abra is the issuer of the Abra Boost account. We issue the accounts directly for Boost, whereas before it was Prime Trust, okay? And so as part of that migration, because our bank license is pending, right, we have to limit who can use Boost in the US. Once we have the bank license and the regulator approves Boost in the US, and we're already working with them on it, they're well aware of what we're doing, we'll be able to turn on retail. So I don't have a specific timeline for it yet, except to say I'm spending a lot of time and money, by the way, because my legal costs are going up for this, to educate the regulators on this and to make sure they're clear on the fact that Boost will be available at some point to retail investors. So no specific timeline, except to say it is very high on my list. It's way at the top, actually, to make sure that Boost is available to 100% of our users. And look, that was the reason why we formed Abra Bank in the first place. And it's simply a process. We are in this for the long game, okay? We're not the cowboys telling you to unbank yourselves. We're not the irresponsible, lack of risk management company that wants to make a quick buck. For me, this is literally a 20-year game, right? And by the way, the game will continue with Abra long after I'm gone. Abra, I hope Abra's around literally forever. And it just gets better and better over time. But it is a long-term game. And we are in the very beginnings of this game, okay? And as such, we are thinking long-term, we're thinking quality of service, we're thinking responsibility in lending and yield and trading and investing. And that includes all the things that go along with being a regulated entity, including transparency, right? I didn't become a bank or try to become a bank because I think that the banking system is great. I think the banking system is broken. I think it's in horrible shambles. But what regulation does is it enforces transparency, it enforces oversight. So it allows me to take advantage of all the great tenets of crypto and crypto rails like DeFi and bring those to you in a way that is responsible, transparent, and still gives you the benefits in many cases of higher yield, lower interest rates for borrowing, opportunities to invest in new cryptocurrencies, eventually tokenized, assets that are securities when if and when we decide to go that route. So there's a lot of reasons why becoming a bank is not just about believing in the banking system. I have a lot of issues with the banking system. I think it's a mess, but it does provide for certain transparency. And that combined with crypto, I think is a big win for everyone. All right. So let's see, a couple more questions and then we'll call it a day. Comments on the Abra card. I'm not going to say much about Abra card today because we're going to do another show on that in the future. Robert commented, as I learn more about crypto and blockchain, I'm starting to see a lot of people saying blockchain, not Bitcoin, and other pro-blockchain but anti-crypto. So Robert, we went through this in 2016, 17, and then into 18, where this whole enterprise blockchain mumbo jumbo commentary reigned supreme. I'm going to stop sharing the screen here, and it was all nonsense. I would actually posit that billions of dollars was lost in venture capital industry because people were focused on investing in blockchain instead of Bitcoin, and this is before Ethereum, or eventually instead of crypto, which was actually these new layer one protocols competing with Bitcoin, which I'm very bullish on, as I've talked to you all about many times over the years. And so I've never been a fan or a believer in this blockchain, not crypto narrative. I think it's nonsense. I think decentralization, which is what comes with crypto, is incredibly expensive, right? I've said this many, many times to you. Bitcoin is the most expensive, slowest transaction system ever designed by man. Now, I'm not saying that as a complaint. That's actually a good thing. Why is it a good thing? Well, I mean, it's not a good thing that Bitcoin is expensive. It's a good thing that the decentralization that comes with that cost is finally possible, right? Decentralized transaction processing, where there was no centralized off switch, was never possible before Bitcoin. That's the problem that was solved by decentralization, and we need to preserve that. We need to invest in it and eventually adopt it, because it's the best chance we have of getting off of this kind of Fed model, this Fed never-ending carousel of increasing money supply and irresponsible government. And so I think that to me, that's what crypto stands for, and all these competing technologies that are being developed are about that. They're not about blockchain for the sake of blockchain, which to me is a bunch of nonsense. So let me see a few other questions. Price, do I have comments on the price of C-Perks? No, I don't. I've invested a lot personally in C-Perks. I don't look at the price. I'm in C-Perks for many years to come. I'm not really interested in the short-term price. I'm interested in the long-term value, and I spend a lot of time thinking about the long-term value. Are C-Perks going to be available for new institutional customers? Jim, the answer is yes. So our over-the-counter desk is going to enable C-Perks trading. So if you're not in touch with our sales team, you can go to the institutional section on our site, and the sales team will get in touch with you. They're fantastic, and we're doing a lot on the over-the-counter front for spot trading, and starting to launch now derivatives in the coming weeks. And we had the team on a few weeks ago. We're going to have them back on again, I think, in November to give an update there. And let's see. XRP Minion, I love Abra. I wish all my crypto was here, hopefully soon. XRP Minion, let us know which assets you're unable to move. And we will take that into account. We're constantly looking about what to add next. Now that the trading migration on the technology side is finished and we're in implementation mode to start moving people over, we are going to get back to adding new assets and looking at custody for different types of assets. Tyler, I don't know what the minimums are for OTC C-Perks buys. Just get in touch with the sales desk and they'll answer your questions. Just go to the institutional section of our website, and they'll help you. Let's see. I'm going to take two more questions and then call it a day. I'm starting to lose my voice. I can feel it coming. I talk all day for a living, just not on YouTube. So I am losing my voice this week since it's Friday and I've been talking all week. All right. Let's see. Some comments on the war and the military-industrial complex. I appreciate the commentary. If y'all really like it, I can spend more time on it next week, maybe at the end, so that people can leave if they don't want to hear it. I don't know. I'm very passionate about geopolitics. I'm not going to debate people here, in real time. I guess if people really want to debate, we can try it sometime, but maybe I'll get David Sachs on at some point. I don't know. But let's see, more useful commentary here, maybe some Abra or market specific questions. Thanks for the clarification on Retail Boost. You're welcome. Let's see. Flare Spark airdrop still supported on Abra. I'm not aware of any support for Flare and Spark. I don't recall ever bringing up Flare and Spark. If I did and misspoke, I apologize. I'll check with the team, but I'm not aware of anything. Isn't that related to XRP? And I think we have XRP issues until the SEC thing is resolved anyway. I want us to start listing XRP again. I see no reason to do that because the case is unresolved. But it's not up to me. The lawyers have to work through that with engineering. 1099 for this year for US folks. Time turn 1099s were released a long time ago, bud. So if you didn't get your 1099 back in February, you need to contact support and ask for your 1099, and they'll email it to you. So basically what you do is in the Abra app, you go up to the top left hamburger menu, you click on support, click on live chat, tell them you need a 1099, and they will get it to you. So yeah, if you're late or if you had an extension for your filing in the US, now is the time to get it, because time's a wasting. All right, let's see. One more question, I promise. Let's pick a good one. Let's see. So people asking for your currencies. I don't mind, post your wishes here. We'll take a look at it. We have a list ourselves. A lot of the list is driven by liquidity requirements and market cap and what's happening in the broader trading market. So we do take it all into account. So what is going to happen after market orders? Excellent question. So Mark, after market orders, we're going to release limit orders. We're going to, and limit orders, if you're not clear, basically says, if you are waiting for Bitcoin to get to 50,000 to sell or 200,000 to sell, you can basically put in a sell order and just leave it. And if when it hits that price, we'll sell for you. Or if you basically want to buy when the price gets down to a certain price, we'll automatically trigger the buy for you. That's what limit orders does for you. What market orders does is it basically manages against what's happening in the market and tries to guarantee the lowest possible spread. And before, we were outsourcing those buys. And so we really weren't putting ourselves in the kind of the decision flow as to when to buy. And now with this increased logic that we're rolling out with this new trading system, we're all going to see better spreads and eventually much, much higher trading limits inside the app. So you don't have to go to our OTC or over-the-counter desk to buy a couple $100,000 worth of Bitcoin, for example. In theory, you could do it right in the Abra app. So those of us with a few hundred extra $1,000 sitting around to spare, we can easily buy Bitcoin at a low spread. All right, so let's see. I think. Oops, sorry for that. It sounds like the bell to say it's time for us to start our weekend. And with that, I'm going to. Oh, do I have another question here I want to address? So let me see. My team is asking me. Yeah, so there's going to be no pause to trading. That was another question I got twice, which I thought I addressed. I apologize if I didn't. No pause to trading. So if you've got USD and Abra, you're not going to miss a beat. Any buy or sell or withdrawals will not be paused, and you'll be able to continue using Abra just like you normally do. And there should be no delays, no pauses. If anything, you'll see an improved quality of service. Okay. All right. So I'm going to stop there and say with that, Plutus Lending is Abra time turn. So yes, that is the company's the holding company for Abra is named Plutus Financial, and Plutus Lending is the company that maintains the Abra Earn and now Abra Boost accounts for Abra. Okay. All right. So now I'm really going to stop and wish you all a fantastic weekend. Thanks for joining Money Talks. It was fun getting a chance to talk to you as always. And we'll see you next week. Oh, well, maybe we'll have a trick or treat Halloween special for everyone next week. Have a great weekend, and we'll see you soon. Take care, everyone.